All right, the subject I'm going to cover in this video, it is confusing, but I think in a couple short minutes, I can really clear up some of that confusion. The difference between term and whole life insurance. I'm going to start with term. Term is, as insurance agent, the easiest way we can describe it is it is going to terminate someday. That's not specifically why they call it term, but it's an easy way to remember. It will terminate after a certain period of time. Now, that could be 5 years, could be 10 years, could be 20 years, even up to 30 years, maybe even a little bit beyond that. But the reason the insurance company is going to sell you that life insurance at the rate, very inexpensive rate compared to whole life, is because they expect that you're not going to pass away during that period of time. If you're 25 years old, maybe you get a 30-year term policy, the insurance company knows there's a good chance you're not going to pass away within that next 30 years. So they will offer that to you at a very inexpensive price. It covers generally the kind of people that I'm recommending term for are younger people, maybe people that are starting out a career, maybe got a new family, young kids, and don't really have it in their budget to pay for a whole life policy, but want to make sure their family is protected. Those are the kind of people that would look at a term policy. Also, possibly for the spouse that maybe either isn't the breadwinner or isn't the main breadwinner in the family. You do rely on that person's presence. You do a lot for the family, maybe even provide some income, but they're not the main breadwinner. And maybe once the kids are grown and out of the house, you're not going to be reliant on their income or their time to help take care of the family. You do a term policy for maybe 20, 25, 30 years, and that way all your kids are grown out of the house, and then that policy goes away. Those would be the people that I would recommend a term policy. I'm going to discuss in a minute also annual renewable term. The other policy is whole life, and whole life insurance is going to last for your whole life. Now, the insurance company is taking on a little bit more liability with the whole life policy because they know if you hold on to that policy, they are absolutely going to pay that death benefit out at some point. Could be, hopefully, a long ways down the road, but they are absolutely going to pay out that death benefit as long as you keep paying on your policy. It also can build cash value. It will build cash value if it's a whole life policy. And these are generally what I recommend for if you got a little bit extra money in your budget and you want to make sure your family's protected forever. It's what I have personally for my family. I have a whole life policy and they'll be protected no matter what happens to me. Doesn't matter how long I'm on the face of the earth. They're going to have that death benefit to take care of them when I'm gone. Don't want to have to worry about it. I actually do have a term policy on in addition. I bought a term policy when we first got married and I never canceled it. I'm holding on to that. And when that term is up, believe it's a 20-year term, but when that term is up, then I won't purchase another one. I'll let that one go away because most of my kids will be out of the house at that point, and the whole life policy is plenty to take care of my wife and whoever's still around, but also for final expense. If you're in your 50s, 60s, 70s, 80s, really don't know how much longer you're going to be on the earth. A whole life policy in that case makes the most sense because you don't want to outlive your life insurance. If you get a 10-year term and you're 65 years old and you live till 76, congratulations, you lived a year beyond your life insurance, but now you're without life insurance. And if you've gotten any medical conditions over that period of time, it is going to be a little bit more difficult for you to find insurance at a reasonable rate. You still can get insurance, but at a reasonable rate is the key there. You want to lock that lower rate in early if and when you can on a whole life policy, and that's what you'll pay that same rate for the rest of your life. That's the nice thing about a whole life is it's not going to go up. There is another life policy called annual renewable term, and basically they guarantee they're going to renew your policy every single year on a term. And it is the cheapest when you first sign up for it. It's very inexpensive. It's the cheapest form of insurance because you're basically buying 1 year of insurance, but then they'll guarantee your renewal the next year. Now, the next year it's going to go up. And then guess what? The next year it's going to go up. And then the next year it's going to go up. First 5, 10 years, it's still going to be pretty inexpensive. But if you get 20, 30, 40 years down the road, it's going to be expensive at that point. And especially if you're into your 60s or 70s, and you're wanting to use that for final expense or whatever the case may be, it's going to be very expensive at that point. An annual renewable term might make sense when you're really, really young. Maybe you're 25 years old. Maybe you don't even have a family yet. You want a $50,000, $100,000 policy to cover your bills and things if something's going to happen to you, cover those final expenses, maybe have your parents as the beneficiary, something that's going to be very inexpensive. That's sorry, I didn't even skip to the slide yet. That is going to be the most inexpensive options. Those are good short term, but not long term. That's not a good long term plan. Maybe your income goes up. You want to look at opting for a whole life policy that's going to last you for the rest of your life. Which of these policies is better? Well, the best answer is it depends. The term initially, if you're young family, and again, you want to make sure there's something in place and you don't want to break the budget, then term is absolutely an excellent choice at that point, at that time in your life. And sometimes the term can be converted into a whole life policy, depending on the case. You start out with a term, and then down the road, even if something medically were to happen that would make it difficult to qualify for life insurance down the road, you could convert it to a whole life. It's guaranteed to be able to convert to a whole life policy, regardless of your health status. Whole life insurance, the best thing about it is it's permanent, it's stable, it gains cash value. If you have a month where, or even a couple of months, maybe you're out of work, maybe something happens and the budget's a little bit tight, you can use the money in your policy to pay your premiums if necessary. That's always an option from the insurance companies. The other thing with full life insurance is you can take a loan from it. Money gets tight. You need to make a house payment, you need to make a car payment, whatever the case may be. You can loan that cash value back to yourself. And then again, annual renewable term. I'm bringing that up. It's not a third category. It is part of term, but I'm bringing that up because I've heard about that a little bit recently. And if you're a senior, or if you're older, it might seem attractive initially because it might even look cheaper than a whole life policy, but as time goes on, it's quickly going to get more and more expensive. I would definitely recommend against getting an annual renewal term unless you're a very young person and you're looking at it, or maybe for a few years until you're more established in your career, more established with your income and those kinds of things. Feel free to message me, comment on the video. Let me know if you have any questions, if I can help clarify anything that I talked about in the video. Maybe I didn't clear it up, and I'm happy to make another video to even clarify that. Please let me know.